Welcome back. You're watching Crystal Ball Election Special. I have been in conversation with Madhu Kela of Reliance Capital. The point that you alluded to earlier, Madhu, which is the kind of portfolio construct one must have these days, because a very different set of stocks has led this pre-election rally. Are you prepared to go down already and buy those stocks which are still trading at 40-50% below their 2008 peaks? The stocks which have not moved, which are trading in your words at 12,000 Sensex, or has the time for that not come yet? You would still be higher on the quality ladder and move to those stocks later.
Yeah, Udayan, this is a very, very good question. Actually, if you see the construct of people's mind in the last 5 years, by and large, majority of the fund managers had become defensive. So even if you have a bank, you have a very defensive bank in your portfolio. So very few people were brave-hearted and have gone and bought things which are running currently. So basically, the first point is, if the change happened for positively, then everyone will have to run towards that and change the portfolio mix, which is basically you will have to reduce your bet on defensives, whether it is FMCG, whether it is technology, and by and large even whether it is pharmaceutical, because that is what has crowded your portfolio. Quality has dominated your portfolio, and that is where the returns have been for the last 5 years. So I think it will be imperative for people to change. Now the question is, what do you do now? So I think, you buy companies which are going to be survivor in the 12,500 index, which I am alluding to, irrespective. So even if the government is not very positive, you still can find a lot of value in the market, and I call them in my language, these are like bear market survivor for last 5-6 years. I hate to discuss stocks, but let me just, for the purpose of argument, take something like one of the largest company in India. Take for instance Reliance Industries. Now it has not participated in the last 5-6 years in any run. Now no one argues that there is a lot of value, and the value is not discovered by the market because of the uncertainties which are there. So I am saying whether it takes 6 months or 12 months or 18 months, but those uncertainties will go away. And if there is a more stable government at the center, maybe those uncertainties will go away sooner than what the market is expecting. So maybe you start to participate in companies like them in order to build a portfolio, because I think if you wait till 16th May and if the mandate is decisively positive, I'm afraid it will be too late for you to change your portfolio completely.
Sure. But would you go down the ladder, Madhu, right now and buy something like a metal stock or a public sector bank stock? Because those have started moving in the last few days, and they move really fast. They move 30-40% in a week. Are you prepared to take that bet, or should that bet come later, even if you miss out early gains?
No, I am not prepared to take that bet where I am willing to buy, in my language, anything where the balance sheet is completely fractured and where the business model is yet not on the table, which I can believe. So I'm not willing to buy any of that. But let's say even in the public sector bank, am I willing to bet on 1 or 2 or 3 banks? Yes, I'm willing to bet. But just because public sector banks by and large are running, will I buy the entire pack and say that it should be 10% of my portfolio? The answer is no.
Sure. I remember we spoke many months back last year, and you spoke about HCL Tech being one of your big bets. Now my question is not about HCL Tech specifically. It's about what you do with IT in your portfolio, which has served you in very good stead. Do you bring down the weightage dramatically, throw it out of your portfolio, or do you think this is a period of relative underperformance after which these stocks will generate returns again?
I think in a proper portfolio construct, you never throw IT completely away from your portfolio, because it's like have a 15-16% weight on your overall index portfolio today. So I don't think you throw away, but certainly you have to go a little bit underweight on if you have names which are like, if you have 10 names and if it was constituting overweight in your portfolio, so certainly you sell off 2 or 3 names which you believe may not do as well and which are very, very sensitive to currency. But you certainly don't throw them, but so you definitely go underweight in IT. But then the verdict is not yet out, because election outcome is anyone's guess. But the reason why I'm saying you don't completely throw it out, because if the election verdict is other way around, and if there is a sense of uncertainty, then again, these will be the same sectors which have done well for last 5 years. They will come back in the fray all over again. And again, it will be so difficult, if you like, underweight to the extent of 10% in IT. It will be virtually impossible to come back and buy those companies 20% higher.
I know predicting short-term market movements are absolutely impossible, but what is your gut feeling, Madhu, this time? With the market price in the verdict, the way the wind is blowing, even before the 16th of May, in which case the market would have rallied significantly more from where we have reached already, leaving little valuation room for the market to go up 10% immediately after the results? Or do you think there will be a pause and the market will once again respond with a massive move after the election verdict? Of these two probabilities, which one has a higher weightage in your mind?
So, Udayan, I don't avoid any questions specifically from you. See, this is a little tricky one, because if you tell me whether it is 250 or 210, then I can answer that question for you. But I don't know whether it is 220, 230 or 250. If it is 250 or 250 plus, then I would say whatever pause, then it is a clear-cut buy and dips market. Whatever dips comes, it is a godsend opportunity. And I think people will have to buy these sectors which have been neglected for a period of time. But if it is, somewhat like a 210 or 220 kind of a mandate, then I think, market may pause, and a lot of the upside which would have happened because of the strong government at the center may have been priced in even before the election.
Let me talk about the risks, because we are now talking only about a positive upside and where the market can go on the way up. But there are always counterbalances.
Absolutely.
Let me start with the global picture. By the time June is done and we are through with election season, what do you see in the second half of the year from a global perspective? Do you see any of those risks between June and December manifesting themselves in such a way that it can come in the way of a much bigger rally in the second half for our market?
So I think, again, globally what is positive for us is the significant underperformance of emerging market over the last 24 months. You have seen outflow from emerging markets both in the fixed income as well as in equities. So that has a room to surprise a little bit on the positive side. However, there is one risk which is clearly there in back of my mind, and that is could be possibly a China risk, because what has happened in the last 3-4 months in China is certainly not pleasant, certainly not to someone like me. So we will have to watch that closely, though they have a very strong balance sheet, huge foreign exchange reserve to defend any short-term really bad thing which could happen. But in the next 6-9 months, that is one risk which I will very, very closely monitor. And that has a big impact on India, because we have a significant weightage on metal, what happens to capital goods companies, what happens to industries which are impacted by exports from China. So we'll have to watch this thing very, very carefully.
My last question to you, Madhu, is do you expect the real gains in the economy and earnings to match the kind of mood and momentum that we are witnessing at this point in time? Or do you think it's a possibility that valuations expand because of an election verdict, hopes of a change, to an extent that we get a blowout in the market, but the real gains are much slower than that, and at some point they become a frustrating factor? Do you see that as a possibility, or do you think the real gains will keep step with market gains?
No, I don't think market will always be ahead of it, Udayan. We have been here for 20 years. Markets will always be ahead of it, and the real gain possibility, I think I will agree to your second point. It will be gradual, because there is no magic wand with anyone which can change the scenario in 3 months. But if the verdict is positive, market may price in significantly ahead of time. But it's all about valuation. Today we are comfortable pricing in 14 times valuation for 015. In the change situation, we may be comfortable pricing in 17 times. So to that extent, there is a room, because the local participation has been decimal. But Udayan, since you are ending, let me just make one last point. Though we have been coming and screaming to retail investors that last 1 year has been the time to participate. But I'm really afraid that, if there is a positive verdict and the people who are waiting, because there will always be something in the market which will be uncertain. If people just keep waiting that let the election come in and then we'll participate, I'm afraid that it might be too late. So my urge to people who are watching me, that if you have equity exposure which is run down to 0 or 5 or 10%, don't wait for the last event. Keep a lot of dry powder certainly in your pocket, but start to participate in the market. So at least you will have the interest to monitor what is happening here.
Madhu, always a pleasure. Thank you very much for speaking to me today. Thank you.